Hello again, and welcome to the 5 minutes of financial insights on the Savvy Sibyl YouTube channel. Today, we're going to talk about group disability insurance and individual disability insurance. And there is somewhat of a difference. However, both of them are great vehicles to replace income in the event that we become incapacitated. Uh, like some folks say, it's better to have oatmeal than no meal. So let's dive in. There's at least 51 million working adults who are without disability income insurance. According to a survey conducted by the Council for Disability Awareness, 52% of all single women aged 20 to 65 have no disability insurance at all. And of those who have disability insurance, only 55% of them said they had enough coverage. So that's 10 million women. The odds are 1 in 7 working individuals will experience long-term disability of 5 years or greater before the age 65. So disability insurance policies are designed to replace your earned income in the event of a disability where you are unable to perform your existing job duties. Let's talk about the difference between the two. The difference between the group DI policy and the individual DI policy. Now, with the group DI policy, these policies are typically both short-term and long-term, and they're provided by your employer. They're typically tied to your employment and is not portable. They're typically taxable income to you or prorated for taxes if you, in fact, pay any premium towards your DI policy in addition to what is paid for you on your behalf by your employer. All employees are eligible for DI policy under a group plan. So there is no pre-existing conditions that are eliminated from the group DI policy. Most group DI policies have a 90-day elimination period. That means that you will have to wait 90 days before your benefits actually kick in. And typically with that, there's this 30 days before that first payment. So 90 days have to go by. Then the paperwork is done, and it's typically by the end of that fourth month when you're going to receive your payment. And the group DI pays between 50 and 60% of your income. Remember, I talked about the fact that it's taxed, so you have to take that into consideration. And then it integrates with Social Security benefits should you become eligible for SSI or Social Security Disability Insurance benefits. If this is the case, your group DI benefits will be reduced by the amount that the Social Security benefit is that you receive. Now let's talk about the individual policy. The individual DI policy, the premiums are typically higher than the group DI because you're not getting economies of scale from having a group plan. Usually there is an offer for higher monthly income options with your individual policy. And these options are much more broad, as related to your own occupation or any occupation. So there's a couple of options where you could be covered if you can't do your own occupation. Then there's one where you're covered if you can't do any occupation. So it's broad, and then it gets very restrictive. There's still an elimination period with the individual policy, and that could be 30 days, 60 days, or 90 days. You choose. And of course, depending on your elimination period, that will dictate whether or not your premiums will be higher or lower. There are also other optional riders. So cost of living increases, or maybe your income increases over time. So there are a lot of other optional riders that you're able to elect with the DI policy. And it can limit some pre-existing conditions. So not a little different from what we have heard or seen in the group disability insurance plan. Benefits are not taxable since you are paying your premiums out of after-tax dollars. It can be purchased as a supplement to your group DI policy. Remember earlier when I talked about the 50 to 60% income in your group DI policy? Well, now you can buy an individual policy to supplement the group DI. And it's important in either case to understand or to know at what age coverage ends. And so that could vary with your individual policy. We do know that when your employment ends with the group policy, that's when that policy ends. But with your individual policy, there may be an age difference. So make sure that you're looking at every option under the plan. And then you also want to note if there's any conversionary language regarding occupation or any occupation. Because again, there may be an opportunity, maybe you can't do your job, but you can do another job. So if you have any occupation plan, that means that, well, as long as you can do another job, then your disability insurance may not pay. But if you're doing your own occupation, so if you are a surgeon and you can no longer perform surgery and you did the own occupation, then since you cannot do your own occupation, your disability policy will cover you. So again, understanding the rules of engagement around the group disability insurance policy as well as the individual policy is very key. Remember, the group policy is not portable. Once employment is terminated, that's the end of that policy. With the individual policy, that's your policy. It stays with you. I hope that you found these tips to be useful and the insights as well. If you need additional information or you have additional questions about these various policies and the various riders that may be available, then please reach out to us. We'll be very happy to help you. Once again, thanks for listening in on the Savvy Sibyl YouTube channel. We hope that you have found this information to be insightful. If you're in need of a disability insurance policy, or if you have questions about your existing policy or your group's DI plan, please do not hesitate to reach out to us.